welcome to the last section of the Fibs Don't Like course. I will be going over lifestyle and habits. And one of the main things is knowing when to trade and when not to trade. That is the reason why the first thing I do in the morning before I even consider trading is looking at the economic calendar, because from here you can determine whether it's going to be a day full of volatility or there might be too much volatility. For example, if I go to today's date, right here, the 29th, and we have news coming out in 21 minutes, and that is medium. So that means that it's not going to have too much effect on the market, even though this is going to be an oil rig count, and usually this does move the market for a few minutes. So if you look at the calendar, and if you notice that you see too many high news coming out, or too much people are speaking, then you might want to step back and not trade for that period of time, just because one news can cause the market to go one direction, the next news will cause it to go the opposite direction, and it could just create chaos. So this is one of the things that will gauge your discipline and determine whether you should be trading that day or you shouldn't be trading that day. And one thing I wanted to point out was that I used to look at Forest Factory a lot, but I did notice that Forest Factory misses out a lot of news that comes out. Even important news, like if you see the red folder here, that means this is um, high impact, or medium, orange, or low, which is yellow, which is fairly similar to the one here on my FX book. But I prefer using my FX book because here you will see more news. Even if the news does not affect the market, you still want to know what's going on, and be able to be informed with every single detail. So that is the reason why I use my FX book and Forest Factory. Sometimes I keep it open out of habit, but I don't use it anymore. And also, another thing to consider that you might want to put together with the calendar is the currency strength meter. For example, today, the US dollar has no strength whatsoever. However, the euro is super strong. And you can see those results here on the chart. This has been on a bullish momentum ever since the market opened around midnight last night. And this is indicating that you should never consider taking a short if you're trading a euro dollar pair, and if you see that the dollar is is not having any strength and the euro is very strong. So this is something that could gauge your direction. This is not just a sole indicator that will tell you to go long. Um, However, you do want to look at this and have a higher perspective for market direction, and gauging this information together with the 4 hour chart and also the daily chart. If you notice here, since the currency strength meter is so strong for the euro dollar, we had no opportunities to enter a trade. If you notice here, on this pullback, and once it continued ripping higher, if you run your fibs from here to the highest point, you see that even by measuring the fibs on the smallest micro legs, you see that it doesn't even touch the 62 level. So there were no chances for you to go long using my strategy on this chart. This is something that you just want to anticipate from the beginning of the push and be in the trade early, or just avoid trading this day and stay on the sidelines. My strategy was to run the fibs from this pivoting point here, because this leg here broke this market structure. So I run my fibs from this point to this point. That's when I saw it this morning. And I just left my fibs there and I carried on with my life. And my goal was to see a pullback down to the 62 level, have confluence with this 50 SMA, and then that could have been a long entry. However, if you notice, it just continued ripping. So at this point, you pull the fibs higher, still no pullback. At this point, you continue to pull your fibs higher and just anticipate that pullback. This is not going to happen probably until tomorrow, which is Friday. Sorry, today's Friday. So this move might not happen until probably next week. And it's also New Year, so this is the reason why it's better to just stay off the market and not trade whatsoever. But this is the one of the points that I always show, to be patient, let the pull just happen. The trade, once it completes the push, I will pull back, let the 62 entry unfold, and you can go entry long. So this is one of the things that has to do with looking at the news and the strength meter, and then having the discipline to know whether you should be in a trade or not. And another way to also think about your discipline is by knowing how do you feel emotionally. If you're having a bad day, or you're feeling like you're gonna have a bad day, just stay off the market and do not trade that day. Just because once you involve the slightest amount of emotions onto your trading, it's just gonna completely go against you. So the best thing to do is trade when you're in a good mood, manage your emotions, and know how to be in a good mood all the time. So you would ask, someone might ask, how can you be in a good mood? How do I know that tomorrow I will be in a good mood because I want to trade for a living? Well, one of the thing is, what kind of lifestyle are you having? Are you going to sleep at the same time every day? Are you waking up in the morning at the same time? So whenever you become a trader, you have to be basically, you need to have a routine, a hard routine. And it's kind of like being a robot at the end of the day. So by that, I mean by knowing what time you go to sleep, doing that every single day, waking up at the same time every day. What do you have for breakfast? What do you have for lunch? What do you have for dinner? Whatever you do in your personal life, how disciplined you are with your life and your character, that discipline, you will bring it onto your trading account. If you notice that your trading is being a bit sloppy, then look at your daily habits, and that will reflect on that. So I'm personally a pescatarian. I don't eat meat. I limit my dairy intake, so not much cheese or milk or any of that, and I have a strict diet. So that keeps my mind sane. It's like when people say you are what you eat. Eventually, that is true. So having a clear mind every day because of eating clean and eating your veggies, going to sleep early, waking up early at a set routine. Also meditating. I like to meditate a lot because the market, when it's going against you, it might get you slightly stressed. Also knowing that your stop loss might be hitting like one pip away, but then it goes the opposite direction, and then you end up being on the profit side. But sometimes you might be getting stopped out, and right there the trade goes your direction. And those things will take a toll on your emotions. So that is why you need to know how to manage your emotions, and that is by managing your discipline in life. I can recommend a few books to read that has to do with habits. And after reading those books, or you can download the audio file, that will make a big difference in your personal life, and also you will bring that over to your trading environment. The next topic is winning and losing streaks. Thank God I've never had a losing streak of more than 3 or 4 consecutive losses. However, I have heard many stories of people that they could go months on a losing streak, and that could be very detrimental to your trading career. And it's just because you feel like your mojo is not there anymore, or you feel like you're losing your touch on the market. And it's not like that. It is because there was a change that occurred. Maybe you change the pattern that you were trading. Maybe you're waking up at a different time. Maybe it was something in your personal life that happened. So you need to always rewind. When you're having a losing streak, you want to rewind, look back in time and see, where did things change? And how can you do things how you were doing it 2 or 3 months ago? And once you go back to that, you will be all set. One small thing that I have noticed with new traders is that the first 1 or 2 months when they open an account, oh, they're doing awesome. They're always having winning positions. They'll text me all the time, oh, I'm doing really good. Trading is for me. A few months down the line, they start adding too many indicators to their chart. They start over trading, taking 3 or 4 or 5 trades a day, and then their account just completely diminishes, and they just blow an account. And that is because of having overconfidence and also not the required discipline that is needed to be a trader. When you are a trader, you're your own boss. When you are your own boss, you got to tell yourself what to do at all times. And this is how you can transition your losing streaks into just having winning streaks. And if you have 1 or 2 losing trades, just stop trading, analyze what's going on, or and if you want, just go back to paper trading for a few days, get your mojo back, and then continue trading with your regular account. And that way, nothing bad is going to happen to your account in regards to wiping it. What I personally do is I just place my trades. I try to place 1 trade a day, and that keeps my mojo very high because I just patiently wait for the perfect setup every single day. So if I have a good trade today, awesome, I'm having a good day. Tomorrow, 1 trade, awesome, having a good day. The third day, if you have a losing trade, just let it be. And then on the fourth day, you'll make the money back. On the fifth day, you'll be back on the green. At this point, I've been trading for quite a while. So if I do have a losing position, you guys have noticed on the previous video that I know how to just disconnect myself from my emotions, look at the bigger picture, and eventually I can take another trade and make the money back, which I do not recommend unless you have a few years of experience. But it is possible for you to bounce back from a losing trade, especially if your first trade was a loser. You definitely have an opportunity the same day to take another trade because that will be your second trade. And that has to do a lot with discipline and how to manage your winning and losing streaks. Those winning and losing streaks will happen all the time, and they can make you or break you depending on how you guide your emotions. So be smart. Don't let your winning streaks give you a boost of overconfidence, and don't let your losing streaks just break you and have you quit trading overall. Also, life and screen balance. There is a healthy amount of hours that you can spend staring at your screen, and it all depends on what you do for a living. If you work at an office or at a cubicle and you're staring at your screen all day long, when you get home and you want to study trading or trying to look at charts, it's not good to be looking at charts for longer than 2 hours. However, if you work construction or you're on the field all day, then you should be okay to look at a screen from 4 to 6 hours. That's something very important because as humans, we start developing eye fatigue, and they do have these yellow glasses that are good for people that stare at screens for a long period of time. They're called Gunnar. I think that's one of the brands. It's called Gunnar glasses. Those are good to look into. I personally haven't bought a pair yet, but I will. And those just help you not create that eye fatigue and be able to stay in front of your monitor for a longer period of time. And also being able to disconnect from the chart and just spend time with your family. Because staring at a chart all day long might just cost you a little bit more stress because the charts might be going the not be going in your favor, or you just feel like you don't get the pattern or you don't get the piece of information. So remember that it is best to learn in increments of 1 hour a day than to learn in increments of 5 hours a day. It is scientifically proven that that is how people learn the best, by smaller chunks of time throughout a longer period of time than to all of a sudden go in of go in a couple of hours and then stop looking at charts for a few days. That is something that they actually teach in school when you're doing homework or studying for a test. And those are the things that we need to consider as traders because it is a big responsibility. And if you don't approach trading like a business and you're being your own boss and your employee internally, then it's not going to happen for you. And this is the make it or break it part of being a trader. This is why only 10% of traders make it, and not everybody lasts a long time trading. So if you want to be in this game for a long period of time and be successful, because there are a lot of successful people out there, I personally know a lot of great traders that have been doing this for longer than me, and they live an awesome life. So if you do want to get to that level, it is smart to look into all these small details, and I will lay out the books that should be read in regards to discipline and a healthy life. I'll post a link to the website for the glasses as well, and that should complete this video. Thanks.